Hello, welcome to our insurance optimization webinar. I'd like to introduce Dan Sherman. He's the founder and president of the Navigators Group and a well-known leader, industry leader in financial navigation. My name is Claire Lambert. I'm the director of financial navigation with TaylorMed, and I've been a financial navigator for 7 years. So we've been experiencing a major worldwide outbreak of the coronavirus, or COVID-19. It's led to deaths of thousands, and more than 80 million of us are under virtual lockdown, and it's also had a very severe economic impact. There are a lot of us that are concerned about accessing the care that they need, and also, especially people who have chronic conditions. It's exacerbated the already severe financial toxicity that many people with chronic conditions have already been feeling. We wanted to bring to your attention that TaylorMed has a list of financial navigation resources that we have been compiling and are keeping up to date. You can find it at this website. On our website, and we are keeping it up to date. Dan, can you tell us the difference between an open enrollment period and a special enrollment period?
Absolutely. Thank you, Clara. And first of all, let me just start off with saying thank you for having me on this webinar. I appreciate TaylorMed's interest in looking at this issue of individuals who might be faced with a situation of possibly losing their insurance or are finding themselves without insurance and need access to medical care. So thank you, Clara, for moderating this conversation. We are in very extreme circumstances here, not just in the United States, but across the world. And so I think it is going to be extremely important that people pay attention to this issue in regards to their health insurance coverage. Although there are many organizations or employers are looking at what they can do to protect their employees in regards to health insurance, we are still seeing that people are losing coverage because they're losing their job. And what is the right response to do this? So here in the United States, we already have systems put in place that protects people in regards to health insurance. And there's different kinds of enrollment periods that we have here in the United States. Some of them are the national open enrollment periods, and the other ones are called special enrollment periods. The national open enrollment period, which typically is in the fall, specifically for Medicare and for the ACA, those occur in the fall or late fall. The ACA's open enrollment generally is November 1st through December 15th. But what has happened in several states across the United States, these are states that have that run their own marketplace. They have opened up their marketplace for a COVID-19 enrollment period. So we need to pay attention to this because this could be of great assistance to people who find themselves without health insurance coverage. But then we also have what we call special enrollment periods. So individuals who find themselves in circumstances outside of the national open enrollment periods where they are either losing coverage, or let's say they get married, so there's or they have a child, so there's a major life event that occurs that generates an open enrollment period. So individuals who are currently working right now and find themselves losing their employment, and thus they're also losing their health insurance, they qualify for a special open enrollment period to purchase insurance either through COBRA or through the marketplace. And so we're going to take a look at both of these issues here and how both of these issues will impact patients with chronic medical illnesses who are currently in treatment or maybe treatment is pending. How can these things help them as they're navigating their insurance coverage? So I had mentioned that there are 11 states that run their own marketplace, right? And so most of these states have opened up the marketplace for enrollment into coverage. So if there's an individual who has no health insurance coverage, at this point, if you live in one of these states, you can go to your state marketplace website, or you can call them, and you can actually get enrolled into coverage. You don't have to have met any special enrollment guidelines. So you don't have to have lost your job or getting married or have a child, things like that. Anybody can enroll into this coverage if they find themselves without health insurance.
And TaylorMed does have a list of those websites and phone numbers on that resource list that was referred to at the beginning of the webinar.
Thank you, Clara. That's very helpful because sometimes it's difficult for people to find the resources and where to connect. So yes, please go to TaylorMed and that resource will be found right there. So this COVID-19 open enrollment period will basically focus once again on uninsured patients or patients that have some form of coverage, but it does not meet the minimum essential coverage requirements that has been outlined by the ACA. And so if you are an individual who possibly purchased a short-term policy to try to find some type of coverage, but it doesn't meet the standards of the ACA, you have the ability now to purchase an ACA policy if, once again, you live in one of those 11 states that was mentioned on the previous screen. And then also, once again, the uninsured population can enroll into this as well.
So Dan, in your practice in doing financial navigation, have you run into any patients that have plans that don't meet that minimum essential coverage requirement?
Yes, and so this happens on a fairly regular basis. A patient might come in with a short-term policy. Sometimes patients come in with a health ministry type of insurance policy. And so at that point, it becomes difficult to find the coverage for them, and we need to try to navigate these patients to find better coverage. And so this is not a unique situation. This does occur on a fairly regular basis. And Clara, I know you've worked in this field as well, and are you able to answer that question? Have you run into patients? Right.
Yeah, and I think like right now, I think it's really important, you know, I think that for people who might have these plans, they might be a good choice for them maybe outside of the COVID-19 pandemic. And, you know, maybe they've, for religious reasons or whatever, but it might be a good time to really, if they live in these 11 states, maybe make some deep consideration into switching to a plan that might have better coverage for them and their families.
Right, and I'm going to show some examples here in a little bit of what kind of coverage is available within the ACA, and you can compare that to your own plan if you have an indemnity plan or if you have a short-term plan, or like I also mentioned, a healthcare ministry plan. Sometimes the coverage within the ACA can be quite extensive, and so it could be useful and helpful for a lot of people.
Mm-hmm.
So we also have, you know, the situation where there's the special open enrollment periods as well. And so many times when There are special enrollment periods available to individuals. We always try to look at, well, what can we do to make sure that that individual gets the best coverage available within the marketplace, right? And so this is something that's called insurance optimization. It focuses on enrolling patients or people with chronic medical illnesses into plans that best fit the enrollee's medical situation, right? So it's being much more cognizant of the fact of what benefits are available based upon their circumstances, their medical circumstances, their medical needs, as well as their income situation as well. So it looks for opportunities to lower the out-of-pocket responsibilities that the enrollee would have within the marketplace system. And then sometimes it also includes, so when we think about insurance optimization, it includes, well, sometimes can we add additional coverage to the primary coverage? And that would be specifically for states that have expanded Medicaid. So if they meet the Medicaid expansion rules, we can get them so much better coverage within Medicaid expansion than we could within the marketplace. So I want to focus primarily here this conversation in regards to insurance optimization when it comes to the ACA, the Affordable Care Act. So I think it's important first to understand, well, who can enroll into the ACA? So we have to first of all understand that if you're eligible for Medicare, if you're 65 or older, or if you have Medicare due to disability, then the marketplace or the ACA is not an option. We got to remember that the ACA is insurance for people, it's health insurance for individuals who do not qualify for other types of insurances. So for example, if you are employed and you have access to health insurance through your employer, then the ACA is not, you're not eligible for the ACA. Or if you have access to health insurance through your spouse or a significant other, the same would hold true there, that the proper method of enrolling into insurance would be to go through your employer or your spouse's employer and get coverage that way.
I'm going to interrupt you for just a second. Yeah. I would suggest, though, for the states that have the enrollment due to the coronavirus to contact the state. Just in some of the research that I've done, they've actually stated that if you opted out of enrollment with your employer, that you might be eligible. I do think, though, that you might not be eligible for some of the financial assistance, but I would say that you should probably contact the state and find out what you're eligible for still.
Yeah, I think that's a very good point. So, during the national open enrollment period, at that point, I think they would need to enroll into their employer's insurance. But if you are now outside of that national open enrollment, I think that's a very good suggestion that you would reach out to your state and see if there's opportunities there. Thank you, Clara. The other thing that really should be noted here is that there are income criteria in order to enroll into the ACA. And this might sound strange, but this is the way that the ACA was put together and the way it was written, is that you have to meet a certain income threshold in order to qualify for the subsidies within the ACA. You can still, if your income is below 100% of the federal poverty level, you can still enroll into the ACA if your state did not expand Medicaid, but you would not get subsidies. I can have a 20-minute conversation about why that happened. I don't think we have time for that conversation right now, but and then in states that did expand Medicaid, your income needs to be above 138% of the federal poverty level in order to enroll into the ACA. And the reason for that is because states that did expand Medicaid, if you're below 138% of the federal poverty level, then you just get Medicaid expansion. and you have full coverage. And real quick here, the way the ACA was put together, in order for them to call it the Affordable Care Act and make this affordable for individuals, that there's both premium subsidies and cost-sharing subsidies available within the ACA. So if your projected income for the year is below 400% of the federal poverty level, then you get premium subsidies within the ACA. But more importantly for this conversation that we're having here today, there are also cost-sharing subsidies available. So if you're below 250% of the federal poverty level, then all of a sudden your deductibles and co-pays and out-of-pockets starts decreasing. So
you're going to show us some examples of the income like that meets the federal poverty level, right?
Yes, I can show you some of those. And in fact, this next slide here gives a breakdown of what the 2020 FPL, the federal poverty level guidelines are. So for example, if you're a household size of 4 and you make approximately $64,000 a year, you're going to be right around 250% of the federal poverty level. So a household size of 4, if you're below $64,000 a year, now you're going to start receiving cost-sharing subsidies within the ACA. It's just important to understand this because those cost-sharing subsidies can be of tremendous help in reducing the out-of-pocket responsibilities that the person has with their marketplace policy. The other thing that really needs to be pointed out is the way they wrote the law is that you only receive cost-sharing subsidies if you are in a silver plan. So if you purchase a bronze plan or a gold plan, you still will receive premium subsidies, but you will not receive cost-sharing subsidies. And I have it broken down here. You can see, Clara, if your income is between 200 and 250% of FPL, these are technical terms here, but the actuarial value of that policy is 73%. So that means that your cost-sharing goes down to 27% rather than 30%. If you're between 150 and 200%, it goes down to 13% cost sharing responsibility. And then if you're between 100 and 150%, then it's a 6% cost sharing responsibility.
Right, that's pretty significant.
It's very significant for people that fall into that category. So I can show you some example cases here of how that plays itself out for a person that moves between these different FPL guidelines. So here's a 52-year-old single female and has 2 dependent children. So this is a household size of 3. She purchased an ACA policy, and when she purchased that policy, she had told the marketplace that her projected income for the year is going to be $55,000. So she actually falls at 253% of FPL. In this specific case, she was diagnosed with lymphoma and needs 6 months of chemotherapy treatments. So how, this decrease of income that is probably going to be happening for her because she's going to be receiving chemotherapy treatment, she's not going to be able to work, is going to impact this policy. So here is her specific policy. Excuse me. She's the premium that she's paying for this ACA policy is very concerning, right? It's $1,003 a month. And with that, she has a $3,300 individual deductible and a $7,300 max out of pocket for the year. But if she has a significant decrease of income, so we're now projecting her income to be $37,000, and we can put this in the context of COVID-19, right? People are losing income, and the projected income that individuals gave when they purchased the marketplace policy is no longer correct. In this case, her new projected income for the year is $37,000. She now falls at 170% of the federal poverty level. And then this is what happened to her ACA policy, her marketplace policy. So rather than paying $1,000 a month in premiums, she now has a premium of $231 a month, and her $3,000 deductible went down to $600, and her $7,300 max out of pocket went down to $2,400. This is, the opportunities of insurance optimization for people who have a significant decrease of income. I do want to point. Oh, go ahead.
Yeah. Okay. So if this was applicable to somebody, how would they go about making this change?
Yeah, they need to contact their marketplace, right? So if it's a state-run marketplace, one of the 11 that was mentioned on the previous screen, or if the state that you live in the marketplace is being run by the federal government, you need to contact the federal government. If you go to healthcare.gov, that's where you can start the initiation of that. On that main page, you'll see a phone number. You can call them and let them know that what your new projected income for the year is going to be. It's very important, though, I got to point out one specific detail here, is that, and this might change, by the way, the marketplace might choose to change this, but as the law currently stands, is that you're not allowed to switch tiers, meaning that if you already were in a bronze plan, previous to COVID-19, they were not allowing people to switch over to the silver plan just because there was a decrease of income. And so if you are not in the silver plan, you're in a bronze plan or a gold plan, I still would highly recommend that you contact your marketplace and inform them of the significant decrease of income. Certainly that will help with the premiums, and then ask, is the state or is the federal government permitting changing tiers so that they can enroll into the silver plan and then benefit from the cost sharing subsidies.
Yeah, I always say to ask. The worst thing they can do is say no.
Right. I mean, there are the federal government and state government are making exceptions, and you're adapting as COVID-19 is moving along. And so I agree with you, Clara. It's ask and see what is available for you.
Mm-hmm.
So here's another example. Here's a person who's 45 years old, married with 2 children. So household income in this case was $75,000 for the year. They happen to fall at 298% of the federal poverty level. He now is running into the COVID-19 situation, and he's losing his job. And with that, he lost his insurance, and now he's being offered COBRA. Because of the significant decrease of income, now we're projecting income for the year to be $45,000, and now the new FPL is $179. So the question that comes up here now is going to be that I think a lot of people are going to be wrestling with is, when I'm offered COBRA, what's my best choice here? No.
That is pretty complicated too.
It's complicated. And Clara, I'm going to guess that you've run into the situation with clients that you've needed to navigate as well. And so it's not an easy answer. It's all depends on a lot of different specifics. But the first question that I would ask is, does the spouse have access to insurance? And so if that's the case, then consideration should be to enroll into the spouse's insurance. That's one possibility. Here in this case, this person is being offered COBRA, which is for a family of 4, is going to cost $975 a month. And with that, he has a $4,000 family deductible and a $12,000 family max out of pocket. So this is obviously for somebody who has a significant decrease of income, being able to afford a $975 a month premium is going to be very difficult to do. And so here is where a special enrollment opportunity will occur. So this would be across the United States, not just the 11 states that have opened up open enrollment, right? This is all states in the United States can now, any person who lives in the United States can now do this because a special open enrollment period occurred because you lost coverage. So here's the same scenario. I ran the numbers and pulled up this. I mean, here's at what was it, $45,000 a year, FPL of 179. Here's an ACA policy, a marketplace policy that costs $199 a month, zero deductible and a $5,400 family out of pocket. So that would be a $2,700 individual out of pocket responsibility that this individual would have. Now, I do want to point out, Clara, that these numbers are going to change based upon the state that you're in and what's available, what insurance companies have plans on their specific marketplace. So this is just an example of a case here in Michigan of what would be available to them. The numbers shouldn't be drastically different, but they will be slightly different based upon state. Mm-hmm. One more quick example here, and this is a 52-year-old single female, household income $24,000 a year. So not a lot of income, but she finds herself without health insurance. In this case, she never did enroll into health insurance, but she is now diagnosed in this specific case with a new case of cancer. So here's where it's extremely important that if you live in a state that did open up their marketplace for a general open enrollment period, then there's huge opportunity for this person to get insurance through the marketplace. There have been, I think, Clara, I think you mentioned this in our conversation, that President Trump has been asked to open up the healthcare.gov, so the federal marketplace, and I know that's being considered, and hopefully that will occur, because then that will provide this opportunity for a lot of Americans who are going to be struggling because of the COVID-19 situation. But
yeah, there are several organizations that have asked that.
Right. So hopefully that will be listened to, and we'll have to keep a daily watch on this to see what occurs.
Yeah, and if anybody is an advocate of any sort and they feel like writing to their senator or congressman, they can do that.
Yep. I know you've done a lot of that, Clara, so thank you for that. So here's an example, once again, if at 52 years old, $24,000 a year, if that person attempted to purchase a marketplace policy right now based upon the FPL that this person has, they could purchase a marketplace policy for $107 a month. Once again, those numbers are going to vary depending on what state you're in. A zero deductible and a $2,700 max out of pocket for the year. So, these are just three case examples. Everybody's different. Everybody has different diagnoses, different income levels. And so the numbers will obviously be different based upon your specific scenario. But pointing out these opportunities, I think, is important for us to understand and what we can do as our income decreases.
Yep. Well, thank you very much for joining us, Dan. This has been it's complicated content, and I know that we went over pretty high level. So we have a few questions that we've put together to go over. So Dan, what would you advise someone who lost their job due to COVID-19?
Yeah, so a couple of thoughts here, and I'm going to add in here, Clara, I want you to jump in as well. You've done this work as well, but a couple of my thoughts would be, the first thing that I would be asking if you're losing your job is to reach out to your employer and ask them, what are you doing in regards to health insurance? Because there are a lot of organizations that are trying to protect their employees. And even though they might be losing their job or they're going to be furloughed, there are companies that are saying we're going to keep the health insurance going. And so the first line, in my opinion, should be to reach out and see what is your employer doing. The second thing is going to be, well, are you going to offer COBRA? And if the answer is no, then it's what we've already been discussing in this specific webinar is, what's available to you within the ACA. So those would be the main, two main issues when it comes to health insurance. I don't know if you have any other thoughts on that, Clara, but there's multiple other things that should be done in regards to income, but in regards to health insurance, those are the two main ones that I can think of at this time.
Well, I think some people are still working, but there's that potential of losing your job. And I think if you know that it's coming, you are allowed to go on the ACA in advance. So you have 60 days prior to that event. So you can actually sign up when you know that you're going to be losing your insurance.
And that helps specifically for people who are in treatment, right, for a chronic medical illness. You want to be proactive in this so that there's not a lapse in coverage.
So we talked a little bit about COBRA on one of your case examples. Can we spend a little more time just about COBRA and that case example, a little more time about kind of the pros and cons, maybe that particular case could. Yeah.
So it's a very important point. I'm glad that you brought that up, Clara. Well, first of all, COBRA is continuation of your current insurance. So if you're employed and your employer offers you insurance, you continue to have the same insurance. The policy doesn't change. The issue is that you take over the entire cost of the premium. So typically employers pay, right around 75% of the premiums, and then the remaining 25% comes out of your paycheck. Well, now 100% of the premium is your responsibility. So it gets expensive fairly quickly. But as you pointed out, Clara, what's important to be thinking about when you are a person who has a chronic medical illness and you're in active treatment, right? Right now it's April 1st today. So the odds of a cancer patient or somebody with MS or something like that who's been receiving treatments that they have already met their out-of-pocket for the year is pretty high. So when you enroll into COBRA, your deductible is the same. You've already met your deductible. You've already met your out-of-pockets. If you flip over to the ACA, you need to be thoughtful of, well, what are my new out-of-pockets and what are my new deductibles, because they do not transition to the ACA. So even though the ACA might be $200 a month cheaper, it might be cheaper to go with COBRA because then you've already met, if you've already met your out-of-pockets and deductibles for the year.
Right, and I know we're kind of living in an unknown, but there's a potential that we're going to go back to our job, and then our insurance would start back up and we've still met our out-of-pocket.
Right, correct. So yeah, I want to be careful of saying, hey, anybody who's offered COBRA, well, they should go into the ACA. That's not always the answer because once again, it depends on your treatments, it depends on your income, and how long, as you just mentioned, Clara, how long you're going to be out of work. Hopefully you're going to be returning to work in a couple of months, and then it just might have been better just to do COBRA.
Yeah, well, and I guess I would also maybe look into one of HealthWell Foundation to see if you haven't used their grant, maybe for premium assistance.
Right. So if you are a person who's in active treatment, like some type of an infusion for a chronic medical illness, I would highly recommend that you call your infusion center and ask if they have a financial navigator or a financial counselor or a social worker that can help them navigate that. So, Clara, do you want to maybe do a brief description on what copay assistance, how that works in regards to premium assistance?
Yeah, so there's copay assistance helps pay copays, but then there are several organizations that will help pay your insurance premiums, and Healthwell Foundation is one of them. The Leukemia and Lymphoma Society is one of them. And I think the assistance, I'm trying to remember off the top of my head.
The assistance fund has some funds for
right, has some funds that do. Yeah. So anyways, so if there's funding available, those funds would do it. So that might be something that was available. You'd need to reach out to a financial navigator to help you get enrolled and make sure that that was available to you. Right. But it is one of those things that is also available.
Right.
So I know that we talked about this in one of our case studies, but I think probably just advice for someone who already has a marketplace plan and has significant income reduction, just maybe re-clarify.
I think maybe one thing I didn't point out is that it's going to be extremely important that the individual who currently has a marketplace plan, and they had told the federal government or their marketplace what their projected income for the year was going to be. So, in the example that I gave, I think it was $75,000. It will be important that before you call the marketplace, is that you spend some time of really being thoughtful of, well, what do you really think is realistic of what your new income is going to be? We got to remember that, they're extending unemployment quite liberally right now, which is a good thing, right? So in many cases, people are still going to be, if they apply for unemployment, in some cases, they're going to receive 100% of their pay for a while, up to a certain limit. The stimulus package, so that the check that people are going to be receiving, the cash payments, my understanding is that is not taxable, so that should not be included as income, but the unemployment should be considered as income. So spending some time of really understanding what your new income is going to be before you call the marketplace is very important. And the reason why that's important is that there are tax implications into the premium subsidies that you receive. So if you are telling the marketplace that your income has drastically changed, let's say it's changed by $50,000 for the year, but in fact, when the year ends, it was only a $20,000 reduction, you will have to pay back the premium subsidies that was based upon the $50,000 a year income. So I want people to understand that we can't just come up with a loose number and say, well, here's how much I think I'm going to make it. It needs to be thought through and be hopefully as accurate as possible. My hunch, though, is that the federal government is going to understand that this is going to be difficult to analyze right now. And so, who knows how the federal government will respond to that. But I think they will understand that trying to be as accurate on this as possible is going to be very difficult in today's environment.
Mm-hmm. All right. I think we actually already answered that last question, didn't we?
Yeah.
So
yeah.
We did. All right. So do you have any other tips or information that you think we should share with our listeners?
Well, maybe off script here a little bit is these are scary times, Clara. I think everybody, we're going into unknown territory. And so my encouragement to individuals is to take care of yourself, be wise of how you handle your resources, in my opinion. You know, people need basic need items right now. So, you know, the shelter and food and transportation, those are all essential basic needs that people need. So I know that a lot of organizations, utilities and banks and mortgage companies and people who need to pay rent, a lot of those organizations are doing everything they can to help individuals. And so if you have a large mortgage or if you have a car payment, you know, reach out to your lender and see what they are specifically doing for their customers. Because I know most places are saying, well, we will allow for a missed mortgage payment for 3 months and things like that. So try to use your resources for what's important right now, and then reach out to the people that you do owe money for and see what they are doing to be of assistance. I want to encourage people to take care of themselves. These are emotionally difficult times, and to take care of your soul, your spirit, your emotions, I think is extremely important. And I want to say one more thing here. And I just, you know, I go into a hospital setting every single day. I work in a hospital, and I just take my hat off to the people who are fighting this war in those doors. And so I'm just proud to be part of the medical profession right now, and very, very grateful for all of the work that these individuals are doing.
Definitely, definitely. Yeah, so I know that I've received like emails from so many different like my car payment, and they all have stated that if if I need anything to contact. So I think that's very important, that if you're unable to make a payment, that you reach out. I think a lot of people in the past, if they're not able to make a payment, they just don't make their payment. But I think that was a really wise tip. But I think communication is key in this instance. So if you're not able to pay your rent, you're not able to pay your mortgage, you're not able to make your car payment or a credit card payment or insurance, make a phone call. A lot of times they're saying that they have really high call volumes. They've given out email addresses. So make a contact and say, hey, I need help. There's resources available, and make that contact, and you'll be connected with those resources.
Right.
Yep. Well, so if anybody has any questions, you can reach myself or Dan directly at our email addresses. TaylorMed also has a COVID-19 task force, and the email address is listed. We, again, are keeping a resource list available, so please check that out. And thank you again for joining us.
Thank you, Clara. You have a good evening.
You too.